Very good evening and welcome. You're watching the India Development Debate. I'm Tamanna Inamdar. All the attention right now is on Byju's. That has hit the headlines once again. Unfortunately, it's not good news coming up for one of the most valuable edtech startups in the world. Now, the startup which scored top grades during the pandemic is struggling to obtain even passing marks today. The Bengaluru-based education technology company became a darling of both clients and investors as students stayed holed up in houses and classrooms went online. But as students started returning to physical classes, the novelty has perhaps started to wane. Byju's, which is already facing a case on loan default, has also seen a slew of layoffs to cut costs, and there is now another quandary. In the last 24 hours, the auditors, Deloitte, Haskins Sells, resigned, and 3 of their global board members have dumped the once superstar of edtech. The only board members left now are the Ravindran couple and his brother. So what went wrong with Byju's? Was it just mismanagement, or did they fail to utilize the edtech space's potential? Now, in more news coming in which could cause further problems, the MCA has placed its lens on the company. Let me first go across to my colleague Prakash Priyadarshi, who's joining us with more details.
Yes, our sources in the Ministry of Corporate Affairs are saying that they are looking into this matter for quite some time. It's an ongoing process, and such cases are inspected on a regular basis if they find merit based on set regulatory norms. However, government sources are confirming that they are inspecting Byju's matter, and the process has been initiated after finding some flaws in a preliminary investigation, which also include various governance lapses. We are also given to understand that Ministry of Corporate Affairs will follow all standard procedure which is available for such cases to address a governance issue in a particular entity.
All right, to speak on what happened to Byju's, is it the whole sector losing sheen, or is there a problem with internal mismanagement? To get more perspective on this, I'm joined now by Yatish Rajawat, founder of the Center for Innovation in Public Policy, Shriram Subramanian, founder and MD at InGovern Research Services. With me, Ganesh, serial entrepreneur, is with us today on the show, and I'm speaking with Sandeep, Parekh, managing partner of Finsec Law Advisors. Welcome to all of you. Thank you so much for joining us on the India Development Debate. Sandeep, let me begin with you. I'm keen to know your views on what you think is going wrong. It's one bad headline after the other hitting Byju's. We can't even say anymore that the bubble is burst, because I think that happened a few months ago.
So here's the bad news. First of all, thanks for having me here. Here's the bad news. I think everybody knew what was happening. It's just, I think people are just, all the investors, the so-called famous investors, are just playing, passing the parcel and revaluation at new numbers. Everybody is focused on growth, not of the profits, but of some random numbers, including, gross merchandise value and whatnot. We've heard so many new terms. I think everybody knew this was all a big sham, really, in terms of what people were expecting. And to expect something positive to come out of it would have been a surprise, not what is happening today. So I think the governance failure is really kind of a byproduct of this whole madness we've seen over the past 2 years of free money being distributed to companies, expectations being set in terms of whether it's governance, profitability, etc. So I think it's kind of seems like a complete non-secret. And this is not one company. I'm not just talking about Byju's. It's like dozens of companies where we've seen, people are just kind of dancing while the music is lasting. And at some point, the free money has to end. The world doesn't know the concept of free money. We've seen bubbles in the past as well. The most largest one in our lifetime is, of course, the dot-com bubble. And, how valuations fell 70, 80, 90%. So many companies went bust. I think we're going to see a repeat of that. So, because I think this was designed to fail. And, I'm not at all surprised that these things are failing.
An interesting perspective there, Sandeep, because you seem to suggest this is not just a Byju's problem. This is the problem of the space. But would that really be fair? Coming back to you for a follow-up question on that, because you have a lot of startups which are still faring well, which are still doing well. that seem to have a solid business model, even though they may not be in the black. Yes, Sandeep.
Yeah, no. So I think I can pretty much count the number of people. Not being in black is not a great idea. Most of these operations have been have been in operation for maybe 10 years or 15 years. They have not been started in the last 1 or 2 years. So to have a multi-billion-dollar valuation just kind of create stories about profitability after 5 years or 10 years really doesn't cut it. So unless there are businesses which would create profits at near future time period, but as I said, I would count them on my fingertips and not really not even probably a minuscule percentage of the total universe that we don't. So I think we're going to see a lot of fun in terms of the shenanigans. As they say, you see the bodies when the tide goes down, and the tide is going down. It has to go down. Free money doesn't last, and we'll see kind of lots of revelations which will happen, because in a bull market, in a scenario of free money, fraud gets hidden. And when I say fraud, I don't mean just fraud, but also bad governance, poor practices, handing over money for a revaluation of the company. All these practices are kind of by design they would fail, and unless somebody can either show profits and a very, very solid and credible path to profits, which is, my guess is well under 5%. It's not really going to work for a very vast majority of companies which have been funded.
So you said fraud, but not fraud governance issues. Let me come to Shriram Subramanian on what really that distinction is and what seems to be the problem with Byju's. Because it seems like they didn't even make money in the years of the pandemic. I started talking about how they got, that big Zoom for them happened during the pandemic. People were forced to log in online, and edtech sort of blew up. But whatever numbers are available so far shows that even that period didn't help.
Yeah, see, all these companies were, and the business models were set to make losses. In fact, this is captured in the IPO prospectus of some of these companies, saying that we may never make profits in our lifetime. So that is, the entire business model was set from that frame, right? All the private equity investors were viewing it from that frame. They expected the public market investors also to view it from that frame. So that is the fundamental problem that edtech faced, and all other companies have also faced. Even in their heydays, even when they have achieved so much valuation, they are taking millions, hundreds of millions of dollars of funding, they are not showing profits. And that is the fundamental business model problem. Two is, coming specifically to Byju's. Byju's has grown too fast, too soon. It doesn't seem to have put in place even the basics of accounting. It seems to be, the Deloitte letter is scathing, if anything, and for a company which commands a valuation which is probably in the top 50 companies in India or so, there should have been concurrent audit. If it were a listed company, it would have been taken to the cleaners. SEBI would have investigated it, and investors would have dumped the stock overnight. So there was a report that MCA is investigating. I hope that comes to a logical conclusion, because Byju's cannot have numbers of 18 months, 15 months down the line. There is a moral obligation not just to its private equity investors. There is a moral obligation to other stakeholders too, which includes lakhs of students, teachers, vendors, etc. Right? All these stakeholders are impacted if such a large company goes down the drain.
The thing is about what is your responsibility as a company. They're not a listed concern, but is there large-scale wealth destruction going on? And at the end of the day, are corporate governance models being followed? Ganesh, is this a Byju's problem, or is this a problem of the space?
No, so firstly, Byju's is the most valuable startup in India, globally too, and it's a poster boy. So I do hope while we are discussing all of this, it comes to a stable and a good conclusion that does not blow up, because the contagion effects of that on the Indian startup ecosystem in specific and even global startup ecosystem would be very bad. But having said that, see, that we have to distinguish between multiple issues. No point in kicking somebody when he's down. Okay, that this is not really good news. It's bad news after bad news. Bad news. There are serious governance lapses that exist. Like I was mentioned earlier, you cannot say I'm a startup, but I'll take 15 months to publish the result. You know you are acquiring companies. You know you're valued at $22 billion. Basic governance systems, audit, the ability to report, all those things should have been fixed long time back. Enough time has been there. So that's unpardonable. You cannot hide under the garb of a startup and not follow norms that listed companies are expected to follow, or any large companies expected to follow, because it affects not just the private equity investors, as was mentioned, affects everybody, employees, customers, everybody gets affected. So it should be done. But to be slightly generous, see the valuation downs and questions and investigation by regulatory authorities, it's okay. All the public stocks have also fallen. Most of the companies have done where down rounds are marked down in valuation. I'm not very much concerned about that. I'm obviously concerned about the delay, about the resignation of auditors, because that's a bad sign. I'm very concerned about not being able to pay your lenders, taking your lenders to court and missing on the payment and having a legal fight on this. All this is bad. Okay, right? Again, layoffs, we have seen in edtech, all top unicorn companies in edtech have done layoffs. So I'm not very concerned about that. What I'm saying is, let's differentiate between issues which are because there was easy money available, because there are
May I come in, Mr. Ganesh? So what happened with Byju's? From what you're saying, it's sounding like, do you think this was just bad luck? No one wants to kick anyone when they were down, but what do you think happened then?
No, so I think 2 or 3 things happened. One, the acquisitions have gone badly wrong. White Hat Junior, for example, it's not a model that will work. The cost of acquisition is so high. They acquired the company, they almost are shutting it down. It's just not viable. So we clearly have seen bad acquisitions without any model. I disagree with earlier speaker that we have to make profit. See, the risk capital, venture capital is available because you don't make profit. So it's okay. But still the model has to have convergence. So point number 1, wrong acquisition, completely gone wrong. Euphoric days you acquired. Point number 2, you underestimated what returns to normalcy would mean. The euphoria was not going to exist long. And the moment the pandemic started ending, people started going to physical classes from online. And therefore, the capacity you have built has gone completely waste. Third, your loss-making company taking debt is very, very dangerous. $1.2 billion of debt without the ability to service the debt because you don't you're not making profit means you are dependent upon subsequent fundraisers to pay the interest and principal of the debt. Now that is a millstone on your neck. That has come to bite back them. When the markets are down, they are not able to raise money. As it is, they are burning money. Plus, they have interest and principal to service on the debt. So they have got in a bad cycle. They have got trapped. I just hope they come out of it, but they have to come out of it by only one way: by cutting costs, by raising more capital, even at any valuation. I also hear, I'm not privy to the thing, that they are trying to hold on to that valuation of 22 billion by having structured deals and all of that stuff, because apparently some covenants gets breached if they don't meet that valuation. Now, having a complex structure of fundraising of equity and debt with such covenants and structured thing can be a killer when the basic model is not churning profits. I think these 3 distinct things are the cause of the problem that is there. I do wish them well. Byju Ravindran is a terrific entrepreneur. What he has done at scale is awesome. It's just not replicable. World is watching. So wish all the best.
You're wishing all of them all of the best. And yes, it was a concept which grabbed the imagination. Now the question is, what went wrong? Yatish, Rajawat, what are the lessons from Byju's? And importantly, do you think they can recover from this?
I don't think, Tamanna, they will be able to recover from this. Because I don't think so this problem is recoverable. One, the debtors have already launched, almost close to something which should lead to the collapse of their American entity. And the guarantee is, of course, given by the Indian companies. So the first so-called domino has been rolled, and it will have a domino effect down the line to all the entities that are under Byju's. Once the US entity goes down, the valuation falls. When the valuation falls, the covenants, which basically say that you have to continuously raise money at a higher valuation, which most startups promise their investors, will get triggered. So those investors will then ask for the guaranteed return of their money. When they know that guaranteed money is not coming to them, they will file suits both in India and abroad. So the domino effect of all this would be that the company would be split up sold. This is the worst case scenario. But this case scenario does not mean that all startups are bad. This case scenario does not mean that this is a case of just liquidity drying up. This is not a case of liquidity drying up. This is a case of a bad business model that was perpetuated by a string of investors and by a promoter who did not pay any credence to either corporate governance or to the model itself. You see, the model was, he was not selling education. He was selling a device. If you look at the revenue model, 70% of his revenue came from selling a device, and only 30% came from selling the content. So it's not a tech company. It was actually a hardware reseller. So there's a fundamental, and that's what people are now coming back and saying. But this was being said for the last 7 years, that this is not an edtech company. This is a hardware reseller. The bigger issue, and I think that what Ganesh was saying, and is important, that this should not be used as a large brush to tar all startups. This should not mean that all startups have bad governance. This also should not mean that risk capital, which comes to startup, comes because they don't make profits. It comes basically because they don't make profits, and no bank or nobody will lend to them. So you get risk capital from either VCs or these funds who lend. So that should not just go away because Byju goes down or Byju is in trouble. I think that would be
I think that's happening the world over, with or without Byju's. That's the receding tide that Sandeep is talking about. Valuations have been knocked down for several companies around the world. The free money or easy money is gone. But the question is that a sustainable business model? Can the edtech space grow as was thought earlier?
So, Tamanna, the issue in edtech is again very deep. Okay, one of the issues that has happened in edtech over the last year and a half or so is that most content that was the so-called competitive edge an edtech had has got commoditized. Okay, particularly in India, everybody has the same assessment. Everybody has more or less the same tutorials. The faces change, but now it doesn't matter whether you change the face or not, because AI is making it possible to replicate and create content at a fast more pace than it was ever done before. So yes, there is a fundamental challenge in the edtech sector, which is arising from the change in the technology. And don't forget, the biggest edtech in this country, which most people don't know, is the government of India. The government of India, Disha platform, serves 200 million students in this country. And the content on that is available in 26 odd languages. It serves every state board in this country. So, Byju's and all don't compare against what is already available free. So, and
true,
Disha
but I mean, so there are still a host of edtech companies out there. Sandeep, Parekh, I want you to come in on this. Do you think Byju's will survive? And is there a cautionary tale there?
So, as I said, this is, I don't want to specifically talk about Byju's. I have not seen the numbers which have come out and all the primary material with respect to, I've just seen the one-page letter of Deloitte. So I don't want to specifically comment too much on Byju. I just want to mention, overall what we've seen in the past 2.5 years is not sustainable. And according to me, a very large number of companies, even with a good story, so one of the commentators mentioned that, you don't need profit. Yeah, you sure don't need profits, but you need to have some pathway to profit. Just creating random stories and PowerPoints is not going to cut it any longer. So I think you're going to see a very huge swathe of companies which are going to fail, which are going to shrink, which are just going to go away. And some of them are going to be good companies. I'm not saying that they're all trash. There's some will be good stories, but people are not going to believe those stories because, when free money ends, people expect profitability in 6 months instead of 6 years. So, things change. It's the exact opposite of what has happened in the past 2 years is going to happen, which is, good stories are not going to sell any longer. But I think bad stories are definitely going to go bankrupt. And I think we are only seeing the beginning of that. And this is going to last for another year or two before things kind of go back to somewhat normal. The other side of the pendulum is swinging. Normality is probably still another year or two away when, the entire free money globally goes down and so does it in India.
Come to Shriram Subramanian here. What are the ingredients of a company that will last this low tide, so to speak? Because fine, the expectations may have increased from investors. They want now profitability faster, but there has to be some solid ground at the end of it, isn't it?
No, the solution.
I think,
sorry, the question is for Shriram.
I think profits have to come very soon for many of these companies, and they're probably already getting calls from their VC and PE investors to kind of create a very quick route to profitability and not the 2054 kind of route to profits, which, there's actually a company which has got a projection of 2034 profitability. So I think all that is going to be for good, at least for the next 10, 15 years. Okay. So people will have to move very quickly. They may have to shrink. They may have to reduce costs. They may have to do n number of things. But I think the message from investors is going to be, become a solid company in terms of profits and not just these fictional numbers that you've been peddling for the past few years.
Okay,
so
there
will be, I think, kind of.
Let me get Shriram in on that. Yes.
Yeah, specifically with respect to Byju's, if anything, it should not have been the investor directors who should have resigned. It should probably have been the founders who should have resigned from the board, right? The founders need to step away from the company. The company needs to raise funding at any valuation, even at 90% discount to that peak valuation, and needs to have put in place the basics of accounting and needs to have some value systems which a company going concern should have in place.
I want K. Ganesh's view on that. The star of the show is Byju Ravindran. And, we've seen that companies built on these big personalities sometimes do run into rough weather. What do you make of Shriram Subramanian's recommendation, K. Ganesh?
I agree to partly. I mean, that the board needs to play an active role, like it happens with listed companies where you have a certain percentage as independent directors, or in case of RBA, semi-government companies where you have some observers. We need to have some strong board, not just representing founders and investors. The challenge is the company is no longer a startup. It's a large company valued $1 billion. But the governance is still, who is on the board? Investors who have got their interest, fiduciary, not vested interest, but their interest, which is for the money they have put in. You have founders or the management who have got founders, management, share their interest. But there is nobody else, there is no independent directors. Like the way we have in listed companies norms, beyond a certain minimum threshold of number of employees, valuation, revenue, or a number of customers, we need to have a strong board with independent directors, persons of eminence, who are able to actually look at it from the company's point of view. Today, what is happening is the investor is looking at their investment, their point of view. The founder is looking at their shares in their point of view. There is nobody looking at the company point of view. And that is where the independent directors come in. So I think that definitely is a very valid idea that we put the same norms, we hold them same accountable. Don't allow startup terminology to be used to fly under the radar if you have crossed certain threshold in terms of number of customers, revenue, valuation, or whatever is the norms that exist.
I have to wrap. I'm completely out of time, but thank you to all of you for joining us on the story as we continue to track the Byju's tale. We'll take a very short break at this point, but stay tuned. A lot more coming up on the other side.